Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. This week we're going to show you how to screen for first profits, whatever that means. We'll find out in just a couple of seconds here with Kevin Matras, head of our Research Wizard division at Zacks. I'm guessing that here we're talking about companies that have finally posted their very first profit?
Finally.
Finally in the history of the company or in a period of time?
Not necessarily, yeah, a period of time is what we're talking about.
Okay.
With fourth quarter earnings winding down, I have been running a screen where I am trying to find companies who have finally posted their first profit within the last year.
Okay.
And the whole idea is to find companies that have not shown a profit in the previous 4 quarters, but have just recently reported their very first profit in the most recently reported quarter.
And that's important because?
Well, first off, let me just say that a lot of these companies that are going to come through this screen are brand new companies, and this really may be their first quarter in the history of their company. But for others, they may have a long history of profitability, but because of the recession and the financial crisis, maybe they saw their business contract, but they have now finally returned to profitability. And the reason why I like this concept is because if the trend for that company is one of improvement, you can kind of expect to see that trend continue. But for me, and I think a lot of other people like me, they dislike buying companies that cannot show a profit. Mm-hmm. And there are others that won't even consider a company if they are not actually making money. So that's why I'm kind of running this screen right now.
Makes sense. Company may be getting better, but financially, but if they're not yet turning that profit,
right,
people sort of hesitate to plunge in.
Yeah, it's interesting because, if you're a company and you're just losing less money on a quarter-by-quarter basis, mm-hmm, by the very definition, that is growth. You're growing your business by becoming less unprofitable. Mm-hmm. But there is a difference between becoming less unprofitable and actually making money. And that is why I think these companies are kind of interesting to look at, because once you're able to show your first profit, right? Guys who wouldn't even consider looking at that company, now all of a sudden those companies are put on their radar screen, and I think these are the companies that are going to attract a lot of new investor demand.
Yeah, that's that whole less bad situation, which
right,
I thought was like the new norm, but I guess I'm wrong.
Yeah, very interesting.
So take us through the steps here.
Yeah, check it out. The screen starts off by looking at companies where their previous 4 quarters, they produced EPS of less than or equals to 0, which means each of the previous 4 quarters have not shown a profit, all right? Then we want to see companies where they just recently reported a quarterly profit. So the item is EPS for the recently reported quarter greater than 0. Finally, they have shown their first profit, making money.
Got it.
And all of those stocks are being applied to companies that have a price of greater than or equals to $5. Now, that's just a personal preference for me. I prefer to look at companies that are trading over $5 a share. If you wanted to look at cheaper companies, that's fine. But I do want to say that if you were to remove that item, you would now see more than twice as many companies come through your screen.
All right. And speaking of companies that have come through the screen, mm-hmm, let's get a couple of examples.
Yeah, there was about, I think, 45 companies that came through, and here's a list of them. You've got CROX. They report on February 25th, so they're coming up. Then you've got Cypress Semiconductor. They just recently reported on January 28th. They posted a 140% surprise, so pretty exciting. DR Horton, same thing. They just reported a couple weeks ago, 175% surprise. Then you've got GAIA Incorporated. They are going to be reporting on March 9th. And then lastly, you have Kelly Services. On the 5th, February 5th, they produced 125% surprise.
Okay.
What's interesting is that all of these companies have finally gotten profitable, and they look good both technically and fundamentally. But these are definitely companies I think you should pay attention to, and these are companies that kind of generate a lot of excitement getting firstly profitable.
Yeah, I know I'm excited, even though I'm not showing it right now.
You should be, Terry.
I'm excited inside.
Good.
Do you own any of these?
No, I don't.
All right, check out the text version of this week's screen if you want to go through those parameters a little bit more closely and see them in writing to help you kind of visualize them better. You can go to Zacks.com's homepage, scroll down until you get to Kevin's picture, click on the live link headline right next to his picture. It'll take you right to it. And if you want to know more about the Research Wizard, which is the tool that Kevin uses to achieve all of these screens, then go to Zacks.com/Research Wizard. You get the whole lowdown on that product. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.